Hey guys, this is Mubashir, and today we are going to analyze the silver in depth. Right? Actually, I was planning to make this video previously, like weeks ago, but I was not feeling good. That's the reason I was not able to make the video. But let's start the video. Okay. So the main reason because of which I am making this video, because you know that silver is giving very excellent returns. Within if I am not wrong, within 6 months only it has gone on 150% return. So you can understand it is giving very excellent returns. In this kind of market, you know that especially Indian stock market is giving very badly. The small caps, mid caps are doing very bad, right? But still, this silver thing is making very huge return. So let's start the video by looking at the chart, right? As you know that whenever the silver has made it is all-time high previously in the history, and after that it has crashed by the 60%, 70%, 80%. Let's take the example here. So you can look at this where in 1980 here, okay, when it has went to the, like, we can say around $47 per ounce, right? And afterwards it has crashed by the around 889, that is around 90%, right? It is a huge, right? And then again it has stretched, it is all time high at this level, and from sorry, in 2011, right? And from that level it then again crashed by the 72%. So it is a normal thing for the silver, but this time look at this, it has breaking this all resistance here. Now it is, if I talk about from previous all time high, it is up by the 91%. So you can see clearly that it is giving very excellent returns, but this time it is kind of different thing. It is like strategic, we can say. But if you look at the previous historical data, you come to know that whenever the silver has met it is all time high, there was a reason behind that. If I talk about here, there was a manipulation happening here, there was a manipulation happening, but here it is all about the demand and supply, right? i mean if I talk about the industrial demand, especially for the solar panels and electronics, it has increased very huge. If I have also prepared the slide for that. Let me show you. Okay. You know that nowadays silver, sorry, solar panels have a very huge demand, right? And in that there is a huge requirement of the silver too. Yeah, scientists are planning to replace the silver with the copper, but till now silver has been used. If I talk about the for the solar panel, it is around 25% silver is used here. I mean, overall supply, and 24% in electronics and electricals, and 80% in medicals. For the medical, I think it is very difficult to replace them. But yeah, for the solar panels, it can be replaced, right? And electronics, I think it is also hard to do that, right? So if I talk about the industrial demand, it is now around the 600, sorry, 680 million ounce, right? But if I talk about the supply, it is in deficit. It is about 148.9 million ounce. So you can clearly see that there is a huge difference in that, because of which the silver is making it is all time high, right? Look at this. Now it is trading at the $91 per ounce, which is very huge. And if I talk about the for Indian market, let me show you for the MCX. MCX, where is MCX here? For the community here it is MCS. You can see it is now around, we can say, 290, 2,90,000 around. So you can clearly understand there is a very huge movement. Okay, so let's start the why the silver is booming, right? First, uh, let's talk about the three main engines because of which the silver giving going very beyond our expectation. First of all, macro plus rate cut expectation. I mean, uh, Silver loves falling real yields and rate cuts expectation. Right on Jan 14, Reuters reported. the rally was supported by the softer inflation data, which is strengthening the expectation of Fed cuts, and that helped push silver above $90. Okay, when markets smell easier money, non-yielding metals get re-rated upward, right? And the second thing, as I showed you here, that it is all about the demand here, demand and supply. Industrial demand that doesn't stop. I mean, silver is not just a precious metal, like metal. It is used heavily in electronics, electricals, solars, and multiple high growth tech chains. The Silver Institute data shows industrial demand has been at record levels with the strength, especially in electronics. Right. And the third engine we can say physical tightness plus inventory sensitivity. As we know that the silver is a byproduct, right? I mean, it is not separately mined. I mean, it comes with the like zinc or copper. I mean, whenever the miners mine zinc and copper, along with that the silver comes. So basically, if the demand increases, they cannot increase the supply, right? Because of which also the silver price boom, right? That's where the supply problem comes, right? So it is, and you may have also heard about that the China part, right? So that you may heard that they are the major players in the silver, that they have a market share of around 70%, right? So let me clear that China controls 70%. That's the assumption. It is different from this China like having mines of 70% of the world silver. That's not what it means, right? I mean, China is a major player in refining and traded refined supply chain. Headlines claiming 60%, 70% are usually talking about the refined silver flows, trading influence, right? Not global mined output. This is why different articles give you a different numbers, right? And then China added a very big twist. I mean, you may have heard about that. China has implemented a new export control licensing system. It started on January 1st, 2026, and Reuters reported China named 44 companies allowed to export silver for 2026 and 27. Now think about what that does. I mean, if the flow of refined metals to global market depends on limited sets of exporters, then the global buyers face like fewer suppliers, solar approvals and slower approvals, and higher premiums and more supply chain risks. Right? Even if global mining doesn't change overnight, the deliverable refined supply can tighten quickly. And silver is so small that that tied to ties deliverable supply equals a huge price boost, right? So basically, it is not just that. In short, China is the major player in the mining, and it doesn't control like 60 to 70% of the overall silver supply. It controls the refining, right? Of that 60 and 70, it has a market share of around, if I'm not wrong, it is around 15% only. It is not only, yeah, it is a very huge, right? So in today's silver price, right, now if I talk about the question that now the question investors actually care about is that the current silver price fair or is it a bubble? If I talk about the clean answer, today price contains two parts. First of all, fundamental premiums, structure deficit plus strong industrial demand justify a higher long-term price regime than the old cycles. And the second thing, policy plus risk premium. We can say China export licensing adds uncertainty to near-term physical availability, so markets price extra risk. So, if I talk about is it right, it is explainable. I mean, meaning it is not purely speculative, but it is also high volatile. As I showed you previous data of the silver, so you can understand. Meaning overshoots are normal, right? And one more real world proof of volatility, CME increased margin requirement, trading cost pressure, right? But silver still kept railing, showing demand is strong. So price is equal to fundamentals plus China risk premium. So B rule is equal to futures margin headline volatility charts, right? And if I talk about the, like 5 year outlook, so you can first let me show you the this slide clearly that you can see that is here it is. Okay, okay. Let me show you. slideshow from beginning. I don't want to show this slide. Yeah, here, here you can see that initially what happened here. If you look at the like from 2010 to 2020, you come to know that the silver supply and we can say deficit. There is a like no, it is normal thing for the silver that it comes up and down. But if you look after the 2020, you come to know that silver for the past five to for the past 5 years it has been in deficit. That creates a very huge problem, right? And here you look at this silver supply region mining, base metal, lead, zinc, and copper. It comes with the byproduct of the where it is silver. And the third slide shows that this is the refining export share of the China, and this is the actual market share of the China, right, in the mining. And why this shows the market China refineries, they are going to restrict that because of that the physical availability drops, right? That's the reason. So because the reason behind the price rising is the fundamental and the risk premium, right? So now the last part is that the 5 year outlook, right, which for which I was going to talk about that. If I Let's do what most videos don't, like, I mean, 5 year view with the assumptions, right? I'm not doing giving you one fantasy target. I'm giving you three scenarios and what must happen for each, right? First of all, base case, right? Assumptions: industrial demand continues like it is going on, rising like solar panels, electronics. I think for the solar panels, it is going to boom, right? So if it is going to happen, deficit persists, but the market adapts gradually, right? You know that market adapts. China licenses stays, but global supply chain adjusts. So support the Silver Institute has repeatedly highlighted the strong tech-driven demand growth themes through 2030. Base case we can say range by the 2031. If I talk about, it will be around $60 per ounce to the $100 per ounce. So from today's price, it can go up the premium of around $10 more, and it can go around down by the $60 per ounce. That is around a drop of around 35% or 30%, we can say. Okay. Academic research published for the 2030 outlook suggests supply may meet only 60 to 70% of the demand by 2030, right? With total demands projected 48,000 to 54,000 tons a year, and PV could become a massive share of demand. Okay. Bull case, if I talk about by 2031, it can be around 100 from this level 100 to 150. That is we can say a gain of 70%, right? And in squeezes, it can spike higher temporarily because silver's market is small, right? You know that it is so too much concentrated. So assumptions we can take here: China relaxes export controls sooner than expected. Global growth slows enough to cut industrial demand. Investment flows reverse, right? And if I talk about the bear case, it's still not necessarily back to the old world because the structural demand remains, but correction can be brutal, right? So we have to take this into account, right? So the takeaway is long term. Sorry for that. I mean, it. If I talk about the like bear case, it can go from the 90 to 35 to 60. So 30, if I talk about the to 35, that's the very base rate. That is a drop of 60%. So the takeaway, if I talk about overall long term, the structural points higher, but the part will be violent. Right? So it was all about the silver. So according, if you want to go with the silver, I think at the current price, it is a not good idea to invest now, right? You can wait for the correction for at least 10% from the today's priority. It can go down by the if you want to go with the long, you can go with the 70%. Sorry, $75 per ounce to $80 per ounce. Because at the current price, it looks very expensive to me. I mean, now industrialists who want to buy the silver in order to make their products, they are waiting for the correction in the silver so that they can buy. So because of which the demand is like slowing down, right? It is also the reason we can say. So let's wait for that. Okay. Actually, I'm not a SEBI registered research analyst, but I just wanted to share the my knowledge with you guys. Okay. So thanks for the watching my video. Have a nice day.